Look at Meta, Bill, and we say, okay, all's okay in a part of the market that's been so reliant or so relied on. And we're willing to buy Meta today up 7%. And we think that, you know, if there is going to be more turmoil about the economy and the data is going to be a little lumpy moving forward, at least, is that the trade that's going to start working again, even though today, obviously, it's down 1.25%, because outside of Meta and Microsoft, you have a lot of red on the board ahead of Amazon and Apple.
Yeah, I think this is a really great point. So as I looked at the earnings themselves, you go back to end of April, Meta had a big miss, and the spending was a big fear. The report itself really wasn't great. So fleshing that out, I mean, the CapEx numbers that they cited in the report yesterday was actually going to continue to increase. For me, looking at that quarter that reported at the end of April, I think they flushed a lot of that out. So, you know, we added Meta in portfolios that did not have Meta up to weight before earnings. Comfortable to do that. And I also run a concentrated fund. I lifted Meta yesterday before the earnings report up to 12.5% in that fund. So I like to lean into kind of gaming the earnings a little bit and seeing how that kind of played out. But I think when you take a step back, I mean, these big Meg 7 companies, I think the reports overall are great. They're showing you the trajectory of AI being implemented. You're seeing, you know, as well, the AI assistant, the AI studio, and the AI content recommendations driving the operating margins for Meta. So I think what we're seeing here is some of this being implemented. I think we're going to hear more about it from Apple and Amazon later. But I look at the move in the momentum that took hold yesterday. It's surprising to see it all dissipate, but it's not quite dissipated in the big names yet. They're more flattish relative to the broader market.
You do have a broader point as well, Josh, on the idea of, you know, there are some who would suggest just don't fight the Fed. A rate cutting cycle is just good for the market, just like a hiking cycle is bad. Nothing else really matters. The only problem in this case is if they're late and cutting into a fast weakening economy, which puts a lot of stocks in a little bit of a dicey zone.
Yeah, so, well, definitionally, the Fed is always late, because if you're data dependent, then the data comes in and tells you, hey, you're too tight or you're too loose. So we know they'll be late. It's an issue of degree. How late? I don't think they're so late, and I don't think that a quarter basis point rate cut is really going to affect anything in the real economy. It's not like they should have moved in July. Okay, let's say, for argument's sake, they did 25 basis points yesterday. Still got bad data today. Not bad data, normalizing data. Whatever they do today won't matter probably for months, and they would have to do a succession of cuts for it to actually be felt. If you didn't take away this lesson from the last 2 years, then I don't know what you're paying attention to. The Fed cannot move things around with rate hikes or rate cuts or even staying pat in the near term. They can change sentiment, maybe, but they definitely can't affect hiring, affect prices, affect wage growth. They have no ability to do that in the short term. So I don't think it's the end of the world if they're early, late, a little bit late. It's too late that we have to worry about. This is not that, and I think everyone should just take a deep breath. I want to just chime in on Meta. I think Bill's got a great position on his hands here. The key thing that people forget about Meta, and this relates to Amazon tonight, it's not a cyclical bet. The thing about Meta is their advertising business is literally the best on planet Earth. They said on the call, they could basically go to an advertiser and say, just tell us the result you want, and we'll just dial that in to the algorithm. No other advertising platform can do that, which is why, if you're worried about a weakening economy, don't think that's going to smash Meta's ad sales. Think about all of the less useful advertising platforms that will bleed dollars as they go increasingly toward Meta. I think Amazon has a similar story. When the consumer is concerned about the economy, that's not a hit for Amazon. Amazon does better because more people choose to shop there where they know the prices are lower. So a lot of these Mag 7 companies have defensive traits built right into the business model, and maybe that's underappreciated as you see Meta up 7% in a red tape.
Josh, they're not immune.
No one's immune.
They're not immune.
But who's in better shape to deal with a recession?
Absolutely.
Honestly.
Absolutely. They are in better shape, for sure, than the traditional media companies. But they are not immune, and they will go down, the stocks will go down, and the earnings will go down if we are headed into a recession.
However, as they take share, Let's take recession off the table. Let's stay with normalization, because that's what we think we're in right now. If we're in recession, it's a different conversation.
That's why I brought that up.
Yeah.
If we're in normalization, you're right. If we're in a recession, the numbers are going down. You just have to be prepared. And those opportunities will be opportunities. You know, those declines, if they do see a pullback, that's when you really want to be buying.
Brad Gerstner weighing in, by the way, since we're still talking about Meta, we might as well mention his commentary. That stock's up, as we say, near 7%. And you remember, I'll remind you, I'm sure you do, but the letter that started it all, right, of Meta getting more fit, like he had made the argument to get away from spending so much on the metaverse, focus on the core. The metaverse was hard to define. AI appears not difficult to define, and Zuckerberg has spoken about it just this week. He was on stage with Jensen Huang of NVIDIA talking about AI being every part, really, of Meta's business. So not so much of how much they're spending, but where they're focusing the spending on. He says AI is not, this is Gerstner, AI is not only extending and accelerating Meta revenue growth, it is also leading to big leverage on people and OpEx. Hashtag staying fit. You know, got a pound there and a rocket ship on his tweet today, as he obviously remains incredibly bullish on this name, that being Meta. We'll watch the stock.
We're still going to spend $40 billion in capex this year.
Again, it's not the how much, it's where.
Yeah, it's
right?
I think the market is ready. That's what they're prepared for. You look back at that last earnings, they're prepared for it. You look back at the end of April, Alphabet, it had a tremendous response to its earnings report. And guess what? Now the market's digesting, Alphabet spending more, and YouTube a little bit light. So you look at these cycles through these earnings reports, and sometimes it's not a perfect science, but you try to game it a little bit in positioning and who you can be ready for.
All right, let's go to Amazon, Josh, because I know you're anticipating this one. It's reporting as well. We do have a shot of the state dining room there at the White House. I should remind you, we'll hear from the president momentarily on this historic prisoner swap, and we'll go there live in just a moment. Let's continue the conversation, though, on Amazon, but be prepared that we're going to send it over to the White House.
You can cut me off.
President Biden.
This is one of the best stories of the year. You can cut me off anytime for the president.
Talk some Amazon for me. You doubled your position, a couple of months ago.
Yeah, the stock's been pent up below 200. Technically, that looks like a trigger to me. Amazon is down 1% with the majority of tech selling off. The key thing tonight, a couple of key things, $148.7 billion expected for the quarter. Just think about that number, by the way. That would be up 10.6%. But the more important number, earnings at $1.03 would represent a 60% increase year over year. If you've been an Amazon shareholder, this is the moment you've been waiting for. All of that cost cutting, all of that getting lean, now translating into that kind of leverage. Operating income should come in at $13.7 billion. That would be the high end of guidance, which was 10 to 14. They do anything above 14, I think the stock is green in the after hours.
Yeah, cloud growth, AI tailwinds, that's the kind of thing that Wolf Research is talking about today, Steph. Mm-hmm. You've been adding significantly to your own position. Their capex year on year is expected to be up 43%. It's
going to be big. I'm kind of rooting for it to go down because I want to make it even bigger.
Stop it, Stephanie.
Hey, wait. I learned from Jim Cramer, you hope that your stocks go down and then you buy with conviction. Because if you liked it at one price and it's 10% lower, it's an opportunity. So to me, North America retail, I think you need to see a 5% margin. It came in at 4.2% last quarter. AWS, upper teens. We know from Alphabet it was 29, and we know from Microsoft it was 30. So I think they're going to continue. They're the biggest. They're the biggest and the best. So you expect upper teens. They're going to grow slower, but that's a really impressive
18% baked in.
Yeah, I know. And you could see that and maybe a little bit higher. If you don't, then the stock is going to sell off. Then logistics, I think they can continue to gain market share as they have built out logistics. And I mentioned this earlier this week that UPS has actually said they're losing share in logistics to Amazon. So I think there are three ways you win. It's trading at 13.7 times EBITDA, down from 18 times on average. So that's why I'm rooting for it to go down so I can buy more.